Hi, Ken Ravago, Remax Advantage Real Estate. Today's topic is really a topic top of mind to everybody. What's up with the rising interest rates? I have Brian Maier, Mortgage Box, and I brought him in as a special guest. I really wanted to find out, with the Fed actually raising rates in December, what's the impact on mortgage rates?
Well, surprisingly, the public sees the Fed raising rates and thinks that mortgage rates are going to just shoot up.
Okay.
There's really not a direct correlation with when the Fed raises rates and long-term mortgage rates. Because when the Fed raises rates, which they did in December, they raised them a quarter, that's the Fed funds rate. It's not the mortgage rate. The Fed funds rate is the rate that the banks lend money to each other, not that they lend money to consumers. The Fed was very transparent and said, look, we're raising rates in December.
Yes.
We all knew that in October, in November. So mortgage rates had already been impacted by that news. So mortgage rates were already pricing in a Fed rate hike in December. Fed raised rates in December, but they were very dovish in their future outlook, and that actually started pulling long-term interest rates down. So mortgage rates had hit a peak around end of October, around early November. And since November, we've actually seen interest rates now pulling back down. So around November, the average 30-year fixed rate had approached 5%. Now the 30-year fixed rates pulled back down to about 4.5%. We've seen about a 0.5% drop in interest rates in a 2-month period.
0.5% drop?
Which is huge, right?
Yeah.
So that creates a huge buying opportunity right now, because we don't know how long they're going to stay down.
Yes.
So it's like a stock. You
Okay.
know, when you get a stock pullback, you pull the trigger on the stock, right?
Yes.
This is a great entry point, because a 0.5% drop in rate, we're talking hundreds of dollars on somebody's monthly payment.
That's huge for a borrower.
Absolutely.
So, Brian, with that being said, it sounds like you're getting, as with getting a lot of calls coming in for buyers asking, is now the time, And you said there was really not a predictor of when they are going up, it's just a matter of when, right?
Right. Well, yeah, and we're kind of in a holding pattern right now. There's a lot of uncertainty in the market right now with the China trade war and the government shutdown that we just got through. The trade war, the economy. There's a lot of uncertainty in the market right now, and all that uncertainty right now is actually helpful for rates. It's not good for people's retirement accounts, because stocks can be impacted negatively, but that uncertainty, what happens is people pull money from stocks, and these big financial companies that are investing large sums of money, they take the money from stocks and they push it into bonds. Okay. And when that money gets pushed into bonds and mortgage-backed securities, it's actually good for interest rates, which is why we've seen an interest rate drop. Now rates have stabilized, and jobs report just came out. Economy's kind of starting to fire on all cylinders again. We've got kind of the spring boom again. Housing's picking up. New home sales are picking up, which again is kind of fueling. And so there's a little fear that rates are going to continue trending higher as the year progresses, but we haven't seen that yet, which is why now is such an awesome time, because we're seeing rates now at like 2-year lows.
Wow.
So it makes a huge difference on somebody's monthly payment.
So with that being said, if you guys have any questions about interest rates or how much you can afford, anything in general on the financial piece of buying a home, our link is below, our information is below. Ken Ravago, Real Estate and Property Management, and I'll also have Mortgage Box, Brian Maier's information if you want to reach out, okay? Thanks for watching our video today, and you have a great day.
Thank you.